But we start with the breaking news on the economy. The new consumer price index came in a little lighter than expected. The CPI rose 2.7% in November, year over year. That is less than was expected. These numbers were, of course, delayed by the government shutdown. CBS News correspondent Kelly O'Grady is here to break this all down for us. So what do these new numbers tell you?
Look, inflation is going in the right direction. You know, the Fed's 2% target, we're still above it, but it came in at 2.7%. We were all expecting it to hit 3.1%. So this is a very welcome drop. Now, what does that mean? It doesn't mean that prices are falling across the board. It just means that they're rising at a slightly slower rate. But we like to see any kind of progress. I was digging into the numbers, though, looking at some of the prices that went up versus down. And it feels like some of the things that people are thinking about around the holidays, like beef, like electricity, gas, those all saw double-digit increases on the year. And so that's when you have people thinking about their holiday dinner, it's going to cost more. But then there were some areas like eggs and fruit and gasoline, which were on the very good side. So I would say overall, it was a little bit of a mixed bag, but some of those consumer staples really did see some increases. And that does speak to how people are frustrated right now.
So during the address to the country last night, the president did tout that he said that inflation has, quote, stopped. I want to play a bit of what he said.
After 11 months, our border is secure. Inflation has stopped. Wages are up. Prices are down. Our nation is strong. America is respected. And our country is back, stronger than ever before. We're poised for an economic boom, the likes of which the world has never seen.
So the Fed just marked its third consecutive rate cut in September. But, you know, are we still in a K-shaped economy where we're seeing some people who have means doing much better when it comes to costs than people who are not in the middle class or, you know, not earning as much as people in the upper classes, right? Explain what that K-shape looks like.
Right. So the K-shape, right, like this, you have your K, the people who are doing well and are being able to invest, right, employed, invest in the stock market, they keep going like this. They're going well. But then the people who are already struggling, because remember, wages, if you look at the last 5 years, have not grown as much as prices. And that's why people feel so crunched.
Right.
That's where people are feeling pressure, and that's continuing to go down. So yes, we are still very much in a K-shaped economy because of that crunch. Now, you mentioned interest rates. This does emphasize what the Fed did was right. That, hey, inflation's coming down. We should prioritize the labor market. Because remember, we were talking about on Tuesday, unemployment rate ticked up to 4.6%.
Yep.
They don't want that to go out of whack. But I think you're probably going to see Wall Street rally today, maybe even the Santa Claus rally that we like to talk about.
I'd love to see that, yeah.
But it really doesn't reflect what's going on with those lower income and lower middle income folks.
So the president also yesterday touted the fact that he's about to appoint a new Fed chair next year. And that person, whoever he has in mind, is a big fan of low interest rates. But if you're an economist and you're appointed to that, you know this, Kelly, that there's only so much that you can cut. Yeah. Right. And so in other words, I suspect the president will want cuts. They'll probably enact those cuts, but then the more that he wants, they might have to say, hold on. We can't do it every single time or we risk overheating the economy.
Right. And I mean, like I just said, the data right now does say maybe cut interest rates maybe more than once next year, as we're expecting, because of that labor market issue. But remember, when you have the Fed, it's not just the chair making all the decisions.
Right.
It's a whole voting group that have been appointed by previous presidents.
All right, Kelly O'Grady, always good to have you with the breaking news. Thank you very much. For more on this, let's bring in CBS News White House reporter Olivia Rinaldi to talk more about this inflation data. So, Olivia, we just got this data in. How does this square with what the president was talking about last night?
Well, good morning, Vlad. It's good to be with you. This is certainly welcome news for this White House. The president has been saying that inflation will go down. In fact, that it has stopped, although, as you heard Kelly just lay out there, it didn't quite stop. It's just slowing at more of a pace. But last night, the president very defiant about his economic message, telling Americans, don't believe what you see with your eyes about high prices and how you feel with your wallet. Instead, listen to what I'm saying and the rosy picture that I am painting. Take a listen to what some of the president had to say last night about the economy, affordability, and how he views everything.
After years of record-setting falling incomes, our policies are boosting take-home pay at a historic pace. And for the first time in years, wages are rising much faster than inflation.
Now, as you and Kelly just talked about, not always the truth there about wages rising and outpacing inflation. That's why we have this K-shaped economy. And even more important is that Americans don't feel this way. Our own CBS News polling found that 76% of respondents to our poll, so 76% of Americans, feel that their wages are not keeping pace with inflation. And in fact, most Americans, 77% of Americans, say that their economic situation has not really improved. It's stayed the same or gotten worse in 2025. This administration, though, is trying to paint this as perhaps an economic overhang from the Biden administration, saying that eventually all of these changes will take place, that there will be a roaring economy. They're betting on that. But Vlad, at this moment, Americans just really aren't buying it.
So, Olivia, the other thing is the president seems particularly focused on the past and his predecessor. Why is he still relitigating the election of last year?
Well, the president, in that speech last night, spent a lot of time talking about the economy and immigration, which are the two issues he believes he really won on. But on the issue of affordability in the economy, as we've talked about, people are just feeling that squeeze and feeling that struggle. This administration has been trying to make the case that it's not their fault and that eventually the policies that this administration put into place will be felt by Americans and their wallets. Sources that I have talked to say that Q1 of next year is when people are going to feel that change. They say when you start filing your taxes, you get a tax cut. Hopefully you can put that back into the economy, and then you'll start to feel better about your economic standing. They're really banking on that, though, Vlad, because as you and our polling show, or as our polling shows, they're just not seeing that. So they're really focused on trying to litigate this economic message in the press. The president tomorrow is going to head to North Carolina, where he's going to give yet another economic address. So that is 3 in the last week and a half. I think that shows you the pressure that they are feeling to show people that they're trying to do something and that this is working.
Yeah, although, to be fair, the Bureau of Labor Statistics canceled the October report, which means that we don't have those statistics for the month of October. And of course, the government shutdown also exacerbated the issues. And so we won't have, as you say, Olivia, it's an excellent point that a better picture of the economy will come next year in the first quarter. We'll see what it brings. Thank you very much, Olivia Rinaldi, reporting from the White House. We appreciate it.